So I wasn't planning on making this video today, but with Hims and Hers skyrocketing, let's talk about what is going on at the moment. The stock was up 15% yesterday. At the moment, it was up in pre-market. Year to date, the stock is up 153%, which is incredible, really. What a year it's had, and obviously this is my largest position in the stock market. So definitely a big reason why I have had such a good year. The portfolio is up 25% year to date. Last year, my portfolio was up a good chunk as well. Once again, the reason down to that was Hims and Hers being a really good performer. And this is sometimes what I say to you guys is that, in the stock market portfolio, you need one of those stocks just to really kick on a really good amount. And if you do get one of those really big winners, your returns can be massively changed. It's something that I read in One Up on Wall Street by Peter Lynch. If you've not read that investing book, worth it. It's 100% worth it. And there's a page on there talking about his portfolio, and there's a difference between having the one stock in that returns like 5x to having the portfolio where there's no 5x stock. And if you are able to get one of those stocks that just goes absolutely bonkers, your returns are just so much better. And for me, that's Hims and Hers. Having Hims and Hers in my stock market portfolio has let me achieve the returns that I have in the last 3 years from this stock. And if I didn't have it in, my returns would be a lot less. And especially when it's your largest position as well, that definitely helps with the returns. But yeah, I mean, the days, we had a good chuckle about it on the Discord the other day, and we were saying, remember the days where this stock just wasn't light? I remember people weren't talking about it. I think I was the first ever YouTuber to cover this on YouTube about Hims and Hers when it was $3. I remember I had a comment full of people saying it was a trash stock, people saying it was uninvestable. I don't know where Andy Pickering is. I haven't seen him for a year now. I don't know how Andy's doing since he made that comment. And then obviously from there, the stock has gone up to be 1,500% return. And obviously this is the most money I've ever made on the stock market, which on a stock in the stock market, which is great. So we'll talk about, give an update today. What is going on with Hims and Hers. Why is the stock going up so much? And also, where will it go next? Is it going to continue to go up? Is it going to go down? And everything like that. Apart from that, if you do want to join the Patreon, guys, links in the description. If you want to see any moves that I make when buying or selling Hims and Hers, that's where I do post them, as well as 2 exclusive videos a week on there. But yeah, I have been making a few moves on Hims and Hers in the last couple of months as well, with regards to buying the dip, and then also with the rise that's going on, what I'm doing right now with the position. So, first of all, one of the reasons why the stock might be going up so much this year is that it's just executing absolutely amazing. The latest figures out for Q2 is that the credit card data topped 98% year over year for the first time in 6 weeks. Obviously, that's probably with a big issue with the slowdown on the GLP-1s, and then GLP-1s being back on the platform, which 90% is obviously very good, because the growth expected in the next quarter is, wrong one there, that's the next slide that I need for the video, is around about 73%. So that's still very much ahead of where we're expected at the moment. So that's really good data that is coming out from Hims House that posted that. The other thing is that the company's just executing so well. You look at the execution here. So right now, we've got 58% revenue growth expected for 2025. You sometimes forget this, but I went back on Wayback Machine just to see where we were 6 months ago. So I went back to October in 2024 and I thought, what were we supposed to be expecting this year? And if we go on here, you can see that the revenue growth was 36%. So in six months ago, we've gone from 36% revenue growth expected up to 58%. And on an EPS point of view, we've gone from an average of 0.37 expected up to $1.04 expected. So yeah, over a treble up of the EPS expected in 6 months. Incredible. So when you've got strong data coming in from Q2, and also your company's absolutely financially crushed it, it's going to show. As we always say, on the share price, if the financials do very well, it will show in the share price. And that's what's happened. So some part of the rally is that it was valued very cheaply, and they've financially crushed it in Q2 so far, and this year so far there's been big hike-ups, and the share price is reflecting it at the moment. Now, the other thing is that obviously the stock went so low valued. I think we were down at like a 40 times earnings at one point, and now we've gone back up to an 89 times earnings, which is, for a company that's growing at, people might say it's an expensive valuation, but what valuation do you put on a company growing 60% year over year? You're not going to value it at the market average of 20 times earnings, are you? It's a premium valuation. It's going to grow into the valuation a lot quicker when you're growing that fast. So whatever you value it at, 30, 40, 50 times earnings. I mean, ultimately, I would personally say right now, in my opinion, Hims and Hers is definitely back at a fair valuation. I do think 89 times earnings is definitely a fair valuation for a company growing at these sort of levels. So I wouldn't say that there was a time where Hims and Hers a month or two ago was looking very cheap, and I would say that it's certainly not cheap anymore, in my opinion. But probably the main driver, in my opinion, of what is causing the share price to shoot up so much at the moment is the short interest. Now, right now, Hims and Hers is still one of the most shorted stocks on the stock market. Now, obviously, if you're shorting the stock, the reason why is because you think it's going to go down. So people think Hims and Hers is going to go down. Even though they're doing all these financials, they still think Hims and Hers is going to go down. And right now, the short flow is 32%. That's incredible. That is really, really high. If you go on the most shorted stocks out there at the moment, and you can see here, that the short interest of like 50%, 30%. Somewhere around here is, let's have a look, where's Hims and Hers? It's somewhere around here. There, Hims and Hers, right there. I highlighted everything. There we go. Hims and Hers is right there. So, I mean, what is that? Probably like the 20th most shortest stock in the stock market. I mean, to be shorting a stock that is doing those sort of numbers is just absolutely incredible to me. Why you'd want to short a stock doing those numbers is stupid. Now, just to put it into context of like stocks, obviously the reason why people short stocks is because they're going to go down. Look at something similar that's in the most shorted stocks out there to see what you normally short. So if you look at something like this, the one above it, American Rebel Holdings. So this is about 1% more, 0.3% more than Hims and Hers. Now look at their financials. Look at this. Revenue growth, absolutely nothing. Sure, there was a little bit of a jump up there, nothing there. Profitability, not made any profit in the last 10 years. And now the profit has fallen down to 17 million. More than the actual revenue amount, okay? And let's just have a flick back onto Hims and Hers, and let's have a look at their financials. Let's get rid of free cash flow. Look at that. Revenue going basically in a rocket ship. It's like a rocket ship. Look at profitability ramping up in the right direction with great profit margins. And look at what they're expected to do as well. Just continuing going up. But yet, still, the shorts have thrown Hims and Hers into a category where it's in the same sort of space as some of these companies here. Shorts are playing this. Look, even Beyond Meat there. Workhorse, remember them too. I mean, Hertz, they talk about Hertz going bankrupt nearly every week. AGM, these companies at the moment, Hims is being thrown in there with those sort of standard of companies, and Hims is nowhere near those standard of companies. Hims is one of the best companies on the stock market, and yet shorts are trying to play it like it's one of the worst stocks in the stock market. Now, the shorts are probably coming from the point of view is that the valuation maybe has gone up a little bit too much, or they might have been going, it's just a GLP-1 stock, and after GLP-1 goes, it's going to fail. Now, the problem is with these shorts is that the valuation went back cheap, and they kind of won. They could have took a victory lap, but they didn't sell. And the problem is the negative story that the shorts seem to be pushing now is that the GLP-1 situation, but the GLP-1 situation has been resolved because Hims and Hers can now sell it. So the case that the shorts have had has gone. Now the problem is that now the shorts haven't closed probably when they should have closed, and the problem is that the stock keeps going up and up and up and up and up and up. Now the problem is when you're shorting the stock and the float on the stock of the amount of people that are shorting is 32%. The problem is when the stock goes up and up, how do you minimise your losses as a short? Well, the problem is that you buy to cover your losses in the short term. So it goes up, you go, okay, I'll buy and just cover my losses. But the problem is that as they keep going up and up and up, and because they've got short positions, the shorts are losing more and more and more, so that buying more to cover the shorts. The problem is that the more that they keep buying and it keeps going up, then the next person that is shorting, and they've already bought, then they have to buy again. And the faster it keeps spiraling up and spiraling up, and the losses keep going more because they're shorting it, and then they have to buy more because they need to keep covering, then you get what we call the short squeeze. And right now with Hims and Hers, realistically, I think some of the share price performance will be because financially they've crushed it. But without doubt, when a stock skyrocketed 127% within a month's time, and you have a 32% short interest, 100% this is a short squeeze going on. And all these shorts are getting massively squeezed at the moment. Now, I guess that kind of leads me to where do I think the stock is going to go? And that leads me to two answers. So the first answer is short term. The second answer is long term. So I'm going to give you my short term answer first, and I'm going to give you my long term answer for like 4 or 5 years, which is probably the most important one, later. So short term, as this keeps going up and up and up, it could keep going on for a very long time. We could, every day, we see the stock pushing up 5, 10, 15%, as long as these shorts keep holding and they keep getting squeezed. This stock could keep going up that much in the short term. In the longer term, the problem is that you do start getting stretched from the valuation. So then what you might have is some of the long-term investors wanting to take a bit of profit off the dip. And then if the shorts realize, oh, you know what, this is my time to actually get away with this one here, because, you know, I was trying to value Hims and Hers as like a crap company and it's probably one of the best in the world, and now the stock's on a 20% dip. Okay, now I'm just going to cut and run and say, right, that didn't work out for me. And when obviously you got 32% short interest over here as well, and obviously all the buys that they've had to get in during this time frame, there might be a catalyst that where the stock drops like 5%, then it's 10%, 15%, 20%. So I think there'll be like a reality check where the stock does pull back at some point, and I don't know where that'll go to. So in the short term, at the moment, this squeeze could take it on higher, and then I would expect them to be a reset from there. And then I would expect maybe then the shorts move away and go, right, we're not touching this one anymore because it's actually quality stock, and normally the stocks that you play around with shorts in are normally quite not so good stocks. So that's my opinion in short term, is that this rally could keep going for a while, could see it push up 5-10% daily, $70, $80 and $90. But I would expect there to be a pullback in the next month or two, just so the shorts get out and there's a bit of profit taking going on as this valuation gets stretched. And then maybe it falls into actually the share price follows the financials a lot more steadier. We'll see. Longer term, which is the most important to me, because in the long term, I'll be holding most of my shares for the next 5 years. Right now, the valuation is still attractive. It's still okay. I would prefer to get it a little bit cheaper when some of these shorts are out. But I still think from these levels right now, you still make okay money from it. On the low side, not as much as what we've seen before, still 30%-ish. On the mid side, 100%, 140% upside still, which is okay. On the high side, if they really execute with 30% revenue growth, big expansions, 20% profit margins, trading at 40 times earnings, there's still pretty decent upside, to be fair. So I'm excited that, you know, this stock in the next 5 years, if they still financially execute, could still go on to double up, triple up. It could potentially happen. But I'd say that Hims and Hers at this sort of valuation here is, for so long on the YouTube channel, is that I've made videos saying this stock is just absolutely incredibly cheap. And even when the stock rallied up, and you know, we went from, I remember saying this stock is, you know, very cheap when the stock was, you know, $3, $6, and then the stock went up to like $15, and I said, you know what, this stock is still cheap. And then the stock went up to $25, and I was showing you guys the numbers, and I'm going, you know what, there's still like 3, 4, 5x upside coming up here now. Hims is actually now starting to get valued probably a lot more fairer, to be fair, where it's you know, that 100% upside in the next 5 years. So I think the days of Hims and Hers being like the obvious kind of 5x, 10x stock are kind of behind it now. But there's probably still money to be made from these sort of levels at the moment. But like I said, I think short term, it might still go, there might be still that squeeze that goes on. I reckon there will be some profit taken at some point. And then the stock price might reset a little. But for me as a long-term holder, yeah, this is the reason why, like, even though the stock has, shot up so much in the last, like, month, I'm selling some shares, but I'm not selling them all, because I still think the stock will do, you know, really well in the next 5 years, as you can see for those numbers. So yeah, that's overall like my thoughts on why the stock's rallying up. There's some form of execution there. I do believe there's a bit of a short squeeze going on. Well, I think it's going to happen in the short term. I think in the short term, we could see the stock push $70, $80, $90. But I do think the stock stock price will reset again at some point. And then from the long term, I would still expect the stock to do quite well from here, really. So hope that video was useful for you. And thanks for watching, guys. See you in a bit.